I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick. He's a natural resource specialist. He's at UncommonWisdomDaily.com. Welcome back to the show, Sean.
Thanks very much. It's a very good time to be speaking to you because I'm just launching my Red Hot Resource Millionaire publication right now. So it's a great time to be talking.
What is the Red Hot Millionaire about?
Red Hot Resource Millionaire is about undiscovered stocks. I take a Canadian focus, so they can be anywhere really, that could really do well in the ongoing gold rally. As you know, I believe we saw gold enter a bull market at the beginning of 2016, and we've had some give back here, and which is great for launching this publication because the air has just come out of this market in a big way. So we're seeing things come down where they're dirt cheap again, and that is really cool from my point of view. And one thing that I want to mention about Canadian miners, I just saw a report by Macquarie that just came out today over the Bloomberg, in which they said thanks to the decline in the Canadian dollar to 14-month lows, there are stocks in Canada, particularly miners, explorers, and developers, that are screaming bargains. And so obviously I'm not the only one saying this. This weakness in the Canadian dollar is actually due probably to weakness we're seeing in oil and gold, but I don't expect the weakness in like gold to last that much longer anyway. So as that turns around, maybe that'll start to put some life back into the Canadian dollar.
Yes, ironically, as the price of oil goes down, we pay more for gasoline.
You guys pay enough for gasoline anyway. I've bought gasoline in Canada. It's way too expensive.
Make sure you gas up before you come to Vancouver this weekend.
Yes, right. For the Metals Investor Conference. That'll be great.
The Canadian dollar, of course, even though the U.S. dollar's been coming down, the Canadian dollar, as you mentioned, at a 14-month low. Is this going to continue?
Well, Macquarie thinks so. Their target for the fourth quarter is for the Canadian dollar to trade at 65 cents to the U.S. dollar, which is much lower than it is now. I don't know whether that's going to happen, because that kind of crystal ball stuff is really tough because so much affects currencies. I mean, they're just pushed around by so many things. It's really hard to tell. But I would expect it to go lower a bit anyway, because of what's going on in oil, which is as much as we see OPEC and NOPEC, which is those other countries that signed on to the oil production cuts, which were pushed by OPEC, as much as they cut production, we are seeing just oil production ramp up across North America, and so that's kind of destabilizing the price. In fact, as we talk right now, we are seeing oil test its lows from March, and if those give way, I don't know how low oil goes. I mean, you would think $44 would be an obvious target, but who really knows at that point?
Why would U.S. producers crank up production so much? Can they still make money at low prices?
Yes, those that are cranking up can make money at these prices. By the way, there's also a horde of drilled but uncompleted wells. That is, people who have drilled wells, but they really can't make money on them yet, so they haven't fracked them or else actually started to pull oil out of them. But they're all across North America, and so those are waiting for the next leg up in oil. So Yeah, I mean, they have become much more efficient, and they know how to use new tech, and costs have come in. And so, yeah, they are really able to make money at these prices. And so for them, it's a, pretty good time. I'm not saying it's a great time. I'm sure they would like higher prices as well, but our oil production isn't as organized as places like Saudi Arabia and Russia and stuff like that. The government can't push the companies around and say, okay, this is how much you produce. Therefore, they'll produce as much as they can and still make a buck on it. And so that's what you're going to see probably for the rest of this year anyway.
We'll have more with Sean Brodrick right after the break.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures, Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Sean Brodrick. Sean, what about the equity markets right now? We did see kind of a rollover earlier today as we talked, but are they going to continue to climb in the U.S.?
I've seen people try to call a top in this market with absolutely no success. And part of it is because of the U.S. Fed. They just open up the hose of like free money, and so things get bid up because it's inflated by the easy money, by just all this free money that's just pumping around, and so of course it pours into those assets. And so I'm not going to try and call a top, but I will tell you that for stock prices to go higher, they probably need a catalyst that we haven't seen right now, because they're at the top of a range that is actually on a valuation basis. They're at the top of that range when you look at what they expect to earn and like all that stuff. So individual stocks could do extraordinarily well. This is a stock picker's market. But the indices could pretty much go sideways for a while until something new appears. I don't think Trump's tax cuts will actually come out the way that he had planned. There'll be big changes to those. And so if there is disappointment in what finally comes out, then perhaps that will knock the prices of stocks back lower again. But that's okay, because for those of us who haven't committed all our funds, that's a chance to actually get long once some air comes out of this market finally.
Foreign stock markets, I know you've talked about Russia in the past. Should people be looking at places like that?
Well, we just saw the big cap European funds just hit a new 52-week high. So if you're a trend follower, that's something you should definitely be looking at, right? And people are turning much more positive on Europe. It looks like Greece worked out a deal everyone can work with on their debt, and things really seem to be coming around there. And last week we saw the U.S. dollar gap lower, and it hasn't been able to climb back. And this is, I think, basically due to the outlook for economic activity in the U.S., which is not good at all. We had 0.7% growth in the U.S. in the first quarter, and now they've come out with a target for the second quarter that's over 4%. Nobody believes that. Meanwhile, in Europe, they are starting to crank up the expectations for economic growth just a bit, but, it is better than it was, and that's why we saw the euro gap higher last week, and it hasn't come down. So I think that's a trend you can play, buy the pullbacks in the big European equity funds, and they're probably going higher. They pay more dividends. They have lower valuations even after the big run-up. There's a lot of good things to like about them. I'm not saying you should go everywhere in the world. I'm still avoiding Africa, even though everybody tells me it's going to be the next best thing. But you also want to avoid China at this time because the uncertainty in that market is becoming horrific. I mean, they have a debt problem that's actually forced the government to deal with it officially and say, okay, this is a real problem. What the heck are we going to do? And that's going on right now, which is why Chinese equities are really under pressure right now because no one knows what they'll do. It'll probably be something ham-fisted and, too heavy and like stuff like that. But they will come up with some kind of action they want taken. So I wouldn't be a buyer of China. I might look at other emerging markets, and I would definitely look at Europe.
We'll have more with Sean Brodrick right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Sean Brodrick. Sean, the auto market in North America is fading, although I hear in Asia they're still buying.
Yeah. And in fact, that's why we saw palladium break out to a new high last week. It's giving it back now because all the automakers disappointed in their North American sales. So, but you know what? I mean, as long as the Chinese keep buying, that's actually a pullback you might want to buy. Yeah, I mean, the deals they're offering on cars now shows that, I mean, it's a great time to buy a car if you need one. Because here in the U.S. anyway, they are giving some amazing deals. You can own it for months and not have to make a payment and cut prices to the bone and all that stuff. And that has to be squeezing the margins of the big automakers quite a bit. So I think they had a great run, but not everything goes in a straight line. And so, we'll probably have to see some of that come in for a while and all that stuff, and then the cycle will start over again. Like gold, cars are very cyclical. And so if we have a down cycle, it doesn't mean the end of the world. It just means that, that's something we have to put up with for a while, and then things will take off again as people have cars that finally get too old and they have to replace them.
Were you amazed that they were doing things like offering 8-9 year car loans? I mean, car.
Yeah, that looks desperate to me. I mean, really, and you'd have to be desperate to take them, but the U.S. consumer is being squeezed something awful. And these new tax cut proposals that have come out are not going to help the consumer. They're going to help very, very wealthy people. And that's pretty much it. So, regular people will probably get a few pennies, but not anything like they really need to help them. So, that may be part of what's happening too, is people looking at the U.S. consumer, which has had a great run recently, by the way. I mean, if you look at consumer discretionary stocks and stuff like that, they have been charging hard. Maybe it's the time for them to talk. I wouldn't want to call a top in the consumer discretionary yet, but I would keep my eye on it for a possible top, for an opportunity, because that might be something really good. Then again, on the other hand, you have stocks like Home Depot, which has just been, taken off. It's a big company, and yet the outlook keeps getting better and better for it because people are doing things with their homes and stuff like that. So, there's, as I said, it's a stock picker's market, and you have to see what really works out for you. But I think that there are stocks that will do extraordinarily well, even if the major indices just kind of stall and go sideways for a bit.
I saw one thing a few weeks ago about it would take 300 years to make back your money in Amazon, but Amazon is looking to the future. They spend the most on research and development of any company in the world now.
Yeah, I know someone who works at Amazon Australia, and they just do new and innovative things all the time. It's like there is no idea too crazy to try. And sure, 4 out of 5 of the ideas don't work, but that 5th one is, something that really makes them. And they have that big cash flow. They're able to squeeze the competition. they are a juggernaut, and they'll probably remain that way for quite some time to come.
Other retailers, can they keep up with an Amazon?
I don't think so. Of course, I'm short. I'm short one freestanding big box retailer that much, and I got a little money, but it hasn't really gone anywhere yet. I'm expecting much worse because the thing holding Amazon back and holding up the big retailers right now is that my mom will not shop on Amazon, right? She won't. She sometimes calls me to have me buy something and ship it to her house, but she doesn't like Amazon, and there's an entire older generation that does not like Amazon, and they're the ones that shop at the big stores. But what does that mean for your business model? What's that mean for your business model if you're a big store? That means that your customers are going to age out at some point, right? And so I don't think things look good for them. And people might not be buying from Amazon, but they will be buying online in some ways. In fact, what I do when I shop is I get the price from Amazon, and then I look around for who has a better price. Walmart often beats Amazon on the online price, and they'll ship it right to your house, too. And so even if you include shipping, yes, I'm an Amazon Prime member, but even if you include shipping for the Walmart stuff, it's still much cheaper. So that's the kind of thing that will finally hurt Amazon, is if someone can bring that game to them and undercut them. I don't know if it can be done, but Walmart is the kind of company that could actually do that. They have a pretty much loyal base. I don't know if you call anyone happy to shop at Walmart, but they're used to shopping there, right? So so they have that. If they can do the online stuff, they could really do pretty well.
What about Costco? One of their, I think, drawbacks to getting people in the door is you have to buy a membership. I just saw a program on them. Their biggest money maker is that membership fee. I mean, other stores don't charge you before you get in the door.
Yeah, but there are great deals at Costco. Man, I shop at Costco all the time. I have a family of 4. It's not really something for a single person, and of course you probably have single listeners right now where we're taking great umbrage at that. But I mean, if you look at what they have, their prices are really, really good, and they make a point of actually publishing the margin they make on products, and they set a limit on how much that can be. So people know they aren't being ripped off at Costco. And I like to shop at Costco because they treat their employees well, they have low prices, and I feel like it's actually doing good in my community. So I like Costco. Now, they gapped higher last week, and, they keep going higher. And so right now they're near a 52-week high, actually. I think they're 0.3% off of it. That's the number I'm seeing right now. And, breakouts never come when things are oversold. They always come when things are overbought. So I would not bet against Costco right now. They know what they're doing, and they do it extraordinarily well. And that's a big retailer that also has some online stuff, by the way. And I have ordered stuff from them as well. So I guess if you have a big box retailer with a strong online component, they can actually make a go of this. But those that are relying on all the gray-haired ladies, sorry, Mom, that are really coming in the door and just really have that as their major basis, they could be in for more trouble. There are lots of big retailers that I wouldn't want to invest in right now. Things like Costco, Home Depot, we already talked about them. Walmart might do okay. They're still in the early stages of what they're doing. What am I saying? I just looked at a Walmart chart, and it's breaking out to the upside. That looks great, actually. Yeah, and you can see how it's an inverse head and shoulders. And it's going to take off for a while. So, and part of that has to be because it has approached online sales so aggressively, and it brings its big discount model to the online sales. So, there could be a few things that could make Amazon worry. I still think Amazon is a great stock. I mean, it broke out too. It's doing great. So maybe my whole premise about consumer discretionary being in potential trouble, maybe that won't work out. Then again, Most people don't consider Amazon, Walmart, Costco, anything discretionary. These are the things that people buy all the time. So I can tell you, many of my Amazon purchases, once they arrive, I think, what the heck was I thinking?
Sean, what will you be doing in Vancouver this coming weekend?
Well, I have a presentation to give, and I'll also be sitting down with all sorts of miners, explorers, developers, and I'll be doing interviews, hopefully with their CEOs or else maybe chief geologists, that kind of thing, just to get a handle on what's going on. I think there are some incredible bargains in the industry right now, and many of them are at that conference. I mean, I looked at the list, and I checked it against a short list that I keep, and I said, yeah, that one's going to be there, that one's going to be there, that one's going to be there. Makes for a very busy couple of days for me. But there are some great stocks at beaten down prices that I think people should be looking at, and a bunch of them will be at this conference.
Sean, thank you so much for chatting with us.
Thank you. It's always a real pleasure.
My guest has been Sean Brodrick. He's a natural resource specialist at uncommonwisdomdaily.com, and also check out Red Hot Resource Millionaire. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.